Hello, everyone, and welcome to another edition of the Forex Technical Market Update for Friday, October 9, 2015. Now, as I said yesterday, we'll be taking some time off of the market updates for next week because I will be having some investment talks, essentially, with some private investors, and these are held in the mornings when we normally do these updates. So unfortunately, we will be taking some time off of the updates. If there's anything specific, I may just record something for in the evening or something. If anything really is happening, that, for example, the markets are coming out of its consolidation pattern, or I see anything of note for our members in our program. I'll still be trading the account. That's what I do most of the day. Actually, I'll still be trading our managed account. And a question that I received about the managed account: will it be going up all the time? Listen, the managed account reflects how markets function. Markets go down sometimes and market goes up sometimes. If you have an investment that's going up every day, every week, every month, it's normally a Ponzi scheme. We are involved in real world investing and real world trading. You will have, just like a market. Let's take a look at the uptrend in S&P 500. How did this uptrend occur? The market went up, pull back, went up, pull back, went up, pull back, went up, pull back. There are times when the markets are moving sideways. Then there are times when the market moves up and then it moves sideways. And there are times when the market moves down. These are what we call in our portfolios drawdowns. And yes, you will have drawdowns. We're dealing with mature investors here for the income system. You will have drawdowns at some point in time. For example, the S&P 500 recently had a drawdown, but it is on its way back up. So our managed account performance, our signal performance will be the same. You'll have periods of drawdowns and you'll have periods of quick gains in the market, especially when the markets start to trend. So that is how the market functions. And as I said, this is real world investing and not fantasy world investing. Okay, so what's happening with the euro? The euro is up on the morning, and the euro needs to break this 114.60 high for it to get anywhere. It has been in a consolidation pattern, but we need to break this 114.60 high, and then the market could challenge the 117 level with the euro. And we're going to really keep an eye out on what will happen over the next couple of days, because the euro is up, down, up, down, up, down, and seems to be directionless. US dollar index. This is a clearer picture of what's happening. The market looks like it wants to retest the $94 level and even the $93 level, or the 93 level on the index. And if the 93 level is broken, we could see a quick rise in the value of the euro, and we could see a decline in the value of the dollar. And what that could do is probably retrace this move to the upside. So any daily, when I'm away, if you see a weekly close below this level, that would be a good short opportunity, meaning that the dollar may increase if we see a close below this level. As with any trade, make sure you put on your stop losses. I know for our signals, if we do get a close below this level, we'll be entering dollar negative positions. British pound on the day is unchanged, even though the dollar is weakening across the board. The British pound is not enjoying the weakness in the dollar and is unchanged on the day. Now, I was with a coaching client yesterday, and we're speaking about this trend line. And as you can see, this was a trend line. The market broke the trend line, came right back up to the trend line, and collapsed to the downside. And that's how these trend lines can be powerful instruments, and these support and resistance points can be powerful instruments. Japanese yen is still in a consolidation pattern. US dollar is largely weakening this morning, but against the yen, the dollar is actually up. We're still in this triangular consolidation pattern. We need to break above 122 for us to see more direction in this market. Canadian dollar breaking down this morning. We broke out of this flag formation we're speaking about, and the market seems to be looking to correct this move to the upside. And we could see, if we do break below this 128 level, we could see 126 or even 124 in short order. So we'll be keeping an eye out on that for the Canadian dollar. Taking a look at the Australian dollar. Australian dollar is also up on the morning, and it's retracing this move that it did to the downside. And the next area of resistance on the Australian dollar is actually 38% Fibonacci retracement level, which comes in at 73.94. It also coincides with some previous tops in the market. An area of resistance, as you can see here. That's the area of resistance near the 74 level. So the market could find some resistance in this 74 level in the Australian dollar. Taking a look at the New Zealand dollar, we haven't looked at that in a while. The market is up on its area of resistance near the 67 level. And looking at the Fibonacci retracements, the 38% Fibonacci retracement is 67 cents and 93. So we're looking at that area as a possible area of resistance. Now, the British pound, the Australian dollar is up against US dollar, but of note, let's take a look at the British pound versus, I was just looking at it this morning, British pound versus the Australian dollar. Remember, this was a trade earlier in this year that we called. Market was in a triangle, and the market in early April, we entered this market, and we got a pretty good run up in this market for a couple thousand pips. Now the market is retracing that move to the upside. So the market, the area of support is at this 209, 208 level for the British pound Australian dollar. For some reason, the market seems like it wants to wake up now. It wants to get out of its slumber. And this, you remember I told you in October here, latter part of the year is a time where the markets get active. So be on the lookout in this market time. And now I know it's a time when folks are focused on Halloween and Thanksgiving in the States and Christmas. But ironically, this is the time where you can get a lot of market activity. And if you can't pay attention to the market yourself, I encourage you to click on the link below to sign up for the signals, because I see some signs where the markets could be picking up and will start to really trend again. So click on the link below for the signals. I will update you next week, either via video or via an article or something, and then we'll be back the following week. So we'll have a week off, and I hope you enjoy the week and the weekend so far. We'll be still having some webinars next week for those of you who want to participate in some of the webinars. And for our masterclass folks, we'll be having a webinar on the 25th, I believe, of October. That's when the next webinar for the masterclass folks it will be held. Okay, thank you very much for listening, and I hope you have a wonderful day.